My name is Elizabeth Warren. I'm a professor at Harvard, and I also work as the chair of the Congressional Oversight Panel. Not long ago, President Obama announced his plan for financial regulatory reform. I've testified before Congress about the president's plan, but I also wanted to spend some time to share my thoughts directly with anybody who wanted to hear them. Specifically, I want to talk about the president's proposal to create a new Consumer Financial Protection Agency. This is an idea I've worked on for a long time, and I can tell you why in 5 blunt words. The credit market is broken. The broken credit market caused the current crisis, is perpetuating the crisis, and will cause more crises in the future, unless we fix it. The broken credit market is playing out in 3 ways right now. First, consumers can't compare financial products because the products have become too complicated. If you wanted to make a direct comparison of just 4 credit cards, and you put those 4 credit card contracts with all those little inserts that they sent you along with the bills on a table in front of you, you'd have more than 100 pages of fine print to wade through. And have you tried to read the text? I teach contract law at Harvard, and I can't understand half of what it says. The credit world has changed. Companies have learned to compete by putting nominal interest rates and free gifts in big print, then packing the real revenue enhancers, a whole bucket of tricks and traps, in incomprehensible fine print. When customers can't make comparisons and sort out good and bad contracts, the market is broken. Second, a market in which consumers can't make comparisons is a market that stifles innovation. There's an example of this pretty recently. 2 years ago, Citibank was under a lot of pressure from Congress, so it made a big deal out of promising to stop a really nasty practice called universal default. Less than a year later, it quietly picked the practice up again. Why? Well, with all those 30-page credit card agreements, Citibank itself said the customers couldn't see that their card was actually a little better. So Citi made it worse again. And that's how a broken market works. When a customer can't make direct comparisons, better products don't get more market share, and real market innovation goes south. The third way the broken credit market is playing out is by feeding too much risk into the system. These credit cards and home mortgages and payday loans can be very dangerous. They carry high default rates, and when a lot of them are aggregated, they can bring down banks, they can bring down retirement funds, and they may bring down our whole economy. In today's banking system, these risks affect everyone, even those who own their own homes, who don't have a credit card, and who wait to buy a car until they've saved up the cash. We're all paying for this crisis. I believe that a Consumer Financial Protection Agency can reduce risk in the system. It can also reduce the overall regulatory burden. That's right, it can actually reduce it. Right now, there are 7 federal agencies that have some piece of the consumer credit regulation. A single agency can remove layers of contradictory, expensive, and sometimes flat-out useless regulations. In the place of old, complex regulations, the new agency can encourage and help develop some plain vanilla products, off-the-shelf, 2-page mortgages, credit cards, and car loans that will automatically pass regulatory muster. Yeah, banks could offer something else, but they would have to show that what they offer meets basic safety standards. Things like whether or not a customer can read it in under 4 minutes, and whether or not someone can understand the terms. Let's be clear. If someone goes to the mall and charges thousands of dollars to buy things they can't afford, they should have to deal with the consequences. But no one should be confused about which credit card is cheaper or how much a mortgage will cost. The main job of the new Consumer Financial Protection Agency is to set up basic rules so that no one gets tricked or trapped again. If you have any doubts about whether a consumer financial protection agency can work, take a look at history. The FDA, sometimes criticized, but would we be better off like we were in the 1920s when anyone with a bathtub and some chemicals could produce drugs and then tell desperate people that they would cure cancer? Would we be better off if no one checked for carcinogens in our food or rat droppings in our cosmetics? The Consumer Product Safety Commission regulates physical products. May not be perfect, but would we be better off with no safety standards for infant car seats or with more lead paint on kids' toys? The FDIC guarantees money in our checking accounts. Would we be better off without that agency? No one defends government anymore, but the truth is these federal agencies have made our lives safer and they've made markets work better. So who doesn't like this proposal? Big banks and big bank lobbyists. They have benefited from the status quo and they're lining up against this proposal, just like they opposed FDIC insurance back in the 1930s. But this time around, they have built a war chest of millions of dollars. They're interviewing big-time public relations firms, and the rumor is that they're working on their own Harry and Louise ads. So where's the lobby for people who use credit cards and take out mortgages and have car loans? A lobby that can afford its own Harry and Louise ad. Lobbying money or not, we all have a big stake in how this comes out. This is an historic moment for America. You can help by talking to your friends, neighbors, your financial institution, and the people who represent you in Washington. Tell them you support change. Tell them you want a consumer agency, someone in Washington who's on your side. Thanks for your time.